Hey, thanks for tuning in. Today I'm going to review how I manage entries, exit, profit targets, all of the above for a swing trade using some real world examples from 2020 and 2021. So the first one we're going to look at here is PENN Gaming. No, I wasn't buying down here at $4. That did not happen. It also did not need to happen in order to have a home run of a trade. I bring up the monthly chart just to show you, though, where PPO was back here in May and June on the monthly chart, and the volume and the wick. So if you ever see a large wick like that in a monthly chart, it's pretty much the bulls or the bears saying, this is it. We're buying all the shares. We're not going any lower, or we're not going any higher. This particular example, this came out, I believe, around the time Portnoy signed his huge contract with Penn. Penn bought Barstool Sports. And from that point on, it's just been a home run impulse move. We're certainly in a correction now. But whenever you're looking for a good swing trade, you need to have a monthly and a weekly chart that matches the direction of the bet that you're placing. So the second thing that we want to zoom in on here is the weekly. You'll see the same big wick down here. PPO negative that whole time. So you can see the bears still had a lot of pressure on the bulls. Finally capture the 10 on the weekly. Still the slope is down. Took time for it to correct, and it took time for SMA 10 to come up to price. And on the weekly, it actually wasn't until July that happened. And if you look at just from a trend following system, the break above would signal a change in character, and the back test would signal a confirmation. There's two things that you can look at for this particular chart pattern, but really this level up here is very, very important. Seeing price get rejected at it, and then seeing how price created some form of a balance area during that correction. Right, during every correction, you will have a balance area form. And I just want to point out, this entire time, I was not in the trade. Right, I'm watching from the sidelines. No FOMO, not chasing, not doing anything. I was definitely cautious below 20. I did not believe the stock could get above 20. I thought this supply here would be too much. But as I pointed out, the monthly, the quarterly, the weekly charts, the big wicks, and the volume were confirming that in fact was accumulation, and that the impulse move higher was about to begin. When she broke above here on volume, PPO, etc., you knew that this was a for real move. This move down here looked definitely impulsive, or the start of something impulsive. You get the PPO cross down, and this is where I started to get interested in the stock. All right, why? First and foremost, she came into the 20 on the daily. Right, the moving average trader would say, yep, that's a good place to start accumulating shares. So if you notice, buying here June 11th, you could have bought it $29. I didn't buy until July 8th. And the reason for that is I wanted to see the range that this correction was going to put in. And once you get this type of cross after a move of $3 to $40, and then a move from $40 to $27, right, you know that the correction's begun. You have the confirmation here, and what we're really looking for is price to come back to the zero line. That's going to tell us that it's about ready for a reversal. And as you can see, SMA 40, which is this blue line, that's when price tagged SMA 40. And in this particular example, where she's correcting over in time, which is really an ABC flat or a WXY, however you want to look at this, it doesn't really matter, right? This low here was broke and price came back within, and that in and of itself is a reversal sign. Accompanied with this indicator in PPO, the Elliott wave structure that we were looking for, you could even then pull up the retrace tool to see, hey, how much did we just retrace? 38. Look at that. So, that stuff matters, but really to simplify this, you can just draw a rectangle here and say, look, here we go. We're in balance. We broke below. When you're in balance, you want to range trade, meaning buy at horizontal price levels and sell at horizontal price levels. That set up this entry on July 8th. I, in fact, was on the road heading to vacation that day, and I had a limit order in at this level, 27.86. It filled for me while I was on the road on vacation. I put my stop at 26.96 and just let the trade work, right? We knew that the trend on the weekly and monthly charts were alluding to some possible long-term reversal. And this balance area really is a look below and fail setup targeting the other end of balance. And right here, when she broke above, this was an earnings event. So what I ended up doing, and I actually forgot to put that here, I did actually sell some at this point, and then some at this point, and then a third exit later, right? So at this point, you don't want to carry a lot of your position into earnings after a 50% gain. So, you have to lock in some. This very well could have just come right back down on earnings. And you have to pay yourself. That's part of trading. And one easy way to reduce risk is to take half off your bet before earnings, especially when you're in such a profit. And I don't honestly like earnings for this reason, because it's such a binary event. That being the case, earnings were taken well. It then set up a look above and go scenario targeting up here, 58, 60 bucks, whatever it was. So this is where I sold again, another 50%. Now I'm left with a quarter. At this point, you could start to see that she was topping. A bearish divergence was being put in our momentum indicator. Volume was waning. And just the distance, right, as you can see, the distance to SMA 200, right, was at about 60, 50%, where when I bought, the distance from the 200 was, 10, 15%. And so they're just like little clues that you can look at. Now, obviously, that's not definitive, but this divergence is real, and it's telling you to wait for price to come now back to, for PPO to come back to the zero line, in which case it did right here. So this was our first correction, and just not knowing much about Elliott wave, you could say, well, our first correction, that's a wave too low. Our second correction came, it did not break this high, right? Our wave 1, wave 2, wave 3, wave 4. So this is where we bought again. This is what we were looking for. Could the bears push price all the way back down to 40 bucks? And if they could, it would mean that this is overlapping and that this entire move would be retraced. And if they could not, could they come and actually start a fifth wave higher? Which is ultimately what happened. So after buying here on the second retrace, we let this trade work again. And I want to bring up the weekly chart for some context. This was the first tag of the weekly simple moving average 20 after capturing it way back here. So, you have to take the daily chart in context with the weekly chart. And if this is your 1, this is your 2, this is your 3, this is your 4, we could be working on wave 5 right now. 1, 2, 3, 4, 5. Or this could have been a wave 5 top already. I don't really care, right? The moving averages will tell me what's going on. The weekly PPO will tell me what's going on. And I can make an executive call from there. Just to keep this in context though, right? The whole time, we're not buying, all these intraday moves. We're letting the move work for you. Keeping the structure of an Elliott wave, impulse, and all the corrections that could possibly come every time you see an adverse reaction like that, or an adverse reaction like this, which is an ABC down. But here you can tell, right, when price isn't getting past certain levels and PPO is in fact, rapidly heading lower or rapidly heading higher, it's telling you that the trend is reversing. And there's ways that you can look at this. But the point of this video is by the time we got to February, and remember, I say this all the time is greater than price. By the time we were in February, this trade had been on for approximately 6 months. Now, even if we're playing a monthly chart, which in this case we were, my trades are only good for, like 3 to 9 candles, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. And on that candle, we had an outside monthly reversal. And that came in March after the Super Bowl, which ended in February. And this is when I thought they would end the entire run, because it's a sports betting app, right? You need some story to tie what's going to get the people to buy or sell. And I knew this whole time that, especially with this weekly divergence that was setting up, that even if we had set a higher high, if we could not set a higher high here, it would set up a much larger retrace of that move, which is where we are now. So from a daily standpoint, keeping in context the weekly, monthly charts, all that momentum, and we're looking for some wave 5 top, knowing that there will be a 50% retrace of the move, we exited the entire position at the Super Bowl, right? So that was it. And what happened? She continued higher from there. We got out, I think it was, like right here, somewhere around right here. And at that point, we still watched the price go higher, another 40%. But it didn't matter. We had captured, at this point, 300% winner in 6 months. And for those that don't have a lot of experience in this game or have only been playing this game for 2 years, that's a massive win. Those are super rare, and you need to be grateful and take profit on them. Now, if you as a trader wanted to say, look, I want to keep my $27 shares, I'm putting a break-even stop on them, and whatever happens with PENN, that's fine. I sold all of my shares up here. These shares are free, and I have 200% left over in profit that I can allocate towards other trades. Fair enough, right? These are your free shares that you were able to grab from the market. What I like to do is look at things like weekly SMA 20, and this was my clue, as well as the time clue, right? Because I did have a good feel on the timing of this trade. But when you lose the 20, it's done, right? When you lose the 20, you head to the 40, the 50, in some instances, the 100 or the 200. And if you look at the weekly, the 200 is still down at $38 on PENN. And if you take the POC, going back all the way to when this deal was announced with Portnoy, value, right, is at freaking $35. So selling up here, understanding that POC and value, which is ultimately where price loves to get magnet towards, that risk is pretty high. And so recognizing you had a great trade, taking it off the table. That's the end of it. And this is your best case scenario swing trade, right? A swing trade that we buy here, a wave 2 low, that gives you a 5-wave impulse higher. And some concepts to try to focus on here, right? When PPO has a bearish divergence on the weekly and it's at 22, and the requirement for a wave 2 or a wave 4 low is that PPO heads back to the 0 line, your risk is either time or time and price. And in this instance, that's what you've got. And look what happened, right? I mean, it took basically 6 months. I mean, if you're going back to February now, where price has just gone lower to sideways. So that's kind of how I view this. And the reality is negative 13 is where the bears could push price towards before actually reversing, and still maintaining a bullish PPO divergence. So there's a lot to look at from PENN as an example, a lot to learn, and just recognizing that you don't need the complete Elliott wave structure. What's more important is to say, what does a corrective ABC pattern look like? What does a triangle look like? What does a zigzag look like? Understanding that they alternate. This was a flat, this was a zigzag, and recognizing that more often than not, when the market is producing an ABC or a WXY corrective pattern or a triangle into a moving average on the weekly chart while momentum has reset to the 0 line, the probability of your swing trade working for more than just a few days or a few weeks dramatically increases. One other trade we'll take a look at is the Qs. We'll zoom in here to take a look at this, but just another real world example from this year. This right here was an ABC correction into SMA 100. We did see a bearish PPO, right? So that was of concern, and bearish momentum here on the weekly chart as PPO heads back to 0. Still at risk. This chart could come all the way back down here, get the PPO all the way back to 0, then curl up. But again, understanding the rule of alteration, look how steep this correction was for your wave 2. So look how shallow your wave 4 is. This could even be a running flat before we start a massive wave 5 blow off melt up top. So I was looking to accumulate, just to wrap this up, we were buying back here in March. Why? A pullback into the 20. Let's take a look at the daily chart, and I'll even give you some more reasons as to why we were buying back there. One of my favorite setups, is the market loves to come back and test these former balance areas, right? And so this was certainly a balance area, and we never hit the top of the balance area target. And so, especially from an Elliott wave standpoint, if I can continue to count these little ABC corrections down and then impulse moves up, I will continue to assume that the bulls are in charge, especially given the slope of the moving averages, the divergences on the daily chart that we're now starting to see, and just the symmetry here between this move and this move. I mean, it's almost perfectly symmetrical. But just from a standpoint, we had a reversal candle here. We were buying here. We did not sell here. We did not sell here. We bought more here when we broke this pivot low and reversed, closing inside. We did sell here at an all-time high. We sold 50%. Then we bought back 50% back here at SMA 100 at this gap fill, keeping the stop at 297 the whole time, right? So when you sell 50% at the end of wave 1, it allows you to free up mental capital It also allows you to have capital to buy back on this dip here, which you want to see is structurally an ABC down. In this instance, it was a zigzag. It could have been a flat. It could have been a triangle, right? Could have been a WXY. But you're looking for some structure from one of the Elliott wave patterns into some gap, a moving average, a former breakout area, a balance area, right? Some confluence, right? Because we don't know how to predict the future. None of us can do that. I can't do that. I don't have a crystal ball. But what I can do is build a picture, take all the pieces of the puzzle, put them together, and then say this is the most likely outcome given all of the data that we can collect. Not really providing too much weight to any one piece, but taking the collective whole, taking PPO where it needs to be, Elliott wave structure where it needs to be, balance area, are we in balance? Are we breaking out of balance? Volume, moving average system, etc. And then you can build yourself a nice little trade setup that has a pretty high probability of winning, and really where you can start to really level up as a trader, especially from a swing trading standpoint, is understanding the emotions that you yourself are feeling when you're feeling them, and then apply that to the Elliott wave pattern that you're seeing. Because in wave one, right, you should still feel like you're in a bear market. In wave two, you should be convinced it's a bear market. Well, the only way for me to convince you it's a bear market is to close below SMA 100. Well, that's what they did here. Right, close below the 100. Well, that's what they did here. At the end of an ABC, right, you're in a bear market. It doesn't feel good. At wave 5 top, you feel like a genius. You feel euphoric. All your friends are calling to talk about this trade. You start seeing everyone on Twitter talk about the trade that you're talking about. So just recognizing those emotions and associating them, tying them to an Elliott wave structure, a close above or below moving average, looking at the slope of the moving averages and saying, well, okay, we closed below it. Yeah, but the slope of every moving average on this chart right here is up. And yeah, every moving average on the monthly is up too. And yeah, this is definitely stretched from the 40, but it's not that far at all from the 10. And if we look at the weekly and we go back to 2000, sure. But what about if we go back to the 2020 high or the 2020 low? Well, it turns out POC in value, which is where the market makers like to buy and sell, is at 318 and price is at 338. So in fact, going back pretty much 2 years, that's where you start to see the value shifts to 190. But going back to the beginning of the COVID crash, pretty much all the volume that they've done is up here. And one way to look at that is that they're accumulating, building a base at 315 so that they can march higher once again. So yeah, that pretty much wraps up this video. It's definitely getting long in the tooth. That being said, just some things to take with you. Try to scale in, try to scale out, try to be patient. Once you buy, set your stop. Either be taken out of the trade within a week or so, maybe 2 weeks, or wait for the profit targets to hit. And what you'll notice is that when you start trending, all the moving averages now are acting as support, and they're just going to take price to the destination. We don't know what that destination is beforehand. We might have a few ideas, but I've seen many, many times the market surprise everyone. So it's best to not guess and just learn how to read the charts and let the market take you out, or let the market tell you when to buy. And I will end on that. If you like the content, please like the video, subscribe to the channel, check us out on Twitter. Yeah, look forward to seeing you in the next video.